Hey, traders. Happy Thursday, everybody. Welcome to Charts and my Twitter feed. No. Welcome to Charts and Coffee. Great to see everyone. Full disclosure. I drank all my coffee, so now I've moved on to something funny. Apparently, when you make coffee and you run the water through the coffee grounds, you can actually drink the water before it goes to the coffee grounds. Who knew? This is the bubbly variety. So we're doing some post coffee charts and coffee this morning. Hope everyone is doing well. Time to caffeinate and dominate as always. We know what happened yesterday, so let's talk about a couple things that we are dealing with this morning. And one is yesterday, I got a lot of emails yesterday. Rog, what was that rally? What did the Federal Reserve say that was so darn bullish? And the answer is really nothing. What was really interesting is that there was a very small percentage. You might recall during Charts and Coffee yesterday, we had the look at the Fed Fund Futures, Fed Watch graph over at cmegroup.com. And the 3/4 of a point hike column had shown up at some tiny, small percentage. There was a very small expectation that perhaps the Federal Reserve could hike, if not in May, perhaps in June, perhaps one of the future meetings, that they could hike by 3/4 of a point. And that was never discounted in any meaningful way. And yet, when Powell took the 3/4 of a point hike possibility essentially off the table, hey, we're going to keep hiking, but let's not hype up this 3/4 of a point scenario, likely not going to happen. The market thought that was, it's so even funny to say out loud. So when people say there are smart people, the smartest people in the world in the markets, meaning making those big decisions of big sums of money, no, they're not. They're following momentum. They're following trends. They're opportunistic like the rest of us. That rally yesterday was ridiculous. Are we going to see a half point hike in June? Yes. We're going to see another half point hike down the road? Of course. So, okay, I guess it's kind of good that, as I like to call him, Powell did not suggest that 3/4 of a point hike is possible, but the half point hikes are definitely not done. All right. According to the data. And what's the data? It's not speculation. It's what are the Fed Fund futures telling us. So that's where we are. Now, if you watch the video, and I think I did 2 videos on this particular topic, which is number one, gang, the S&P specifically and the Dow are not in downtrends. They're in neutral trends. What that means is you see that yellow neutral trend. That's a tool that I give all the members and I think all the rooms, that simple little, we call them flags, trade flags. Trish started calling them trade flags. Oh, I like that. Reminds me of when I used to skip senior year in high school and go surfing. And you check out the flags on the beach to know what the surf conditions, what the water conditions were like. Man of war, undercurrents, etc. So this is that. Are there man of war? Are there undercurrents? What do we need to be aware of in the market? And so that flag, that trade flag tells us we're neutral. Neutral means at the bottom end of the range, oversold, low read on the slow stochastic. Darvis support. Those are not randomly drawn to yellow and purple lines. That is the Darvis 2.0 support. Darvis plus stochastic and a yellow neutral trend. Gang, that's the bounce. That's an oversold bounce. The catalyst for the bounce, the catalyst was, of course, right, Powell. But we were already poised to do it. Now, were we going to bounce that much? Who knew? But take a look at where we went to. And I want to show you all here. This is not about, look, if there's anything I hate, it's, see, I told you this was going to happen. We have a rule. No post, no boast, right? Which means if I didn't set us up for this trade, I'm just showing you what the lines and levels did. However, one thing that we did do, please don't short this market down at 4,100. Please don't short this market. And if you are looking at a very specific candle pattern, which day 1, day 2, day 3, those of you that follow my minor low, minor highs, Rog, this is a minor low. Absolutely. Would you take this? It's a caution day. It's a caution day, but that is your trigger through 4165. And we had a few traders that said, Rog, I know you're cautious. You're leading the group. We know we don't want to take high volatility, possibly big losses on a very, very tricky day. But there you have it. Oversold buy, confirm with the minor low. We outlined this the day before FOMC. Now, here's where this is helpful. 2 things to remember. In CHOP, cut the range in half. Gang, we are dealing with choppy markets. And whether you're a member of one of our simpler services or not, I want you armed with some really, really simple patterns and processes to help you not get crushed. And if that helps you, if you say, Rog, that minor low pattern made me some money, or cutting the range in half and not expecting the market to go from oversold to overbought, that made me some money. Yeah, let's see what else you got. Come on over. But in the meanwhile, pay attention to those minor lows. Pay attention to first whether the markets are chopping or not. And then if you do have an oversold buy or an overbought short, make your first target the halfway mark, gang. This is going to help you take money from the market and keep more of your own. And that's really what I want to explain here. Now, had we not had Powell, that's a great buy. That's a great buy. It's a solid setup with the stochastic, the pattern, the underlying market trend, everything. And what I want to show you is even on a crazy day like Powell Wednesday, we still went up and tagged that 50% Fibonacci. Another thing you might see, we tagged the wave. We tagged almost a 21 propulsion, but not quite. Notice where those candle bodies are, right at that 50% of the last major move. Really wanted to point that out. Now you might say, what about the NAS, Rog? Great question. The NAS is in a downtrend. This is where underlying market structure is going, regardless of how you trade, gang. One of the things that I'm most proud of with the indicators that we use is that they're not going to supplant anything you're doing. You go grab the tops indicators that we've made free since 2016, 2017, and use them along with what you're doing now. What it's going to do is give you a great touchstone for underlying market trend. I'm not going to encourage anyone to minor low oversold buy a bottom on NQ because this thing's in a downtrend. This thing is, hey, it's better to take advantage of the rip higher than short the rip. SMH, CLOU, XLK, XLC, XLY. That's the corner of the market to keep an eye on. So I'm starting with the broader indices, but I want to show you that if you're looking to measure moves, start with the market trend, okay? But as always, gang, this show is about your questions. So you know what? Let us get to it. Starting off with Giancarlo's. Good morning. Good morning, Professor. Oh, that's great. Good morning, Giancarlo's. The OPEC agrees to a modest production increase in June, which is pretty much in line with what we were expecting. Modest production increase in June. Do I see an opportunity in energy, oil, gas sector? Yes. If you're talking gas, as in gasoline, RBOB, RB, or UGA. Now, by the way, those of you that are interested in, we have a couple people in the master that say, Rog, I don't buy the options. I buy the underlying ETF or stock. That's perfectly fine. And let me tell you why. I bring up RB and I bring up that topic because UGA is not particularly liquid on the options chain, but you can buy this relatively inexpensive ETF that tracks with gasoline, just go straight into that ETF. Now, if you like the underlying stock, remember this, and this is really something that is going to run through all my options trading. If I don't want to buy the underlying stock or ETF, why on earth would I buy the derivative of it? So a lot of traders realize, hey, you know what? If Rog's buying a call at 56.5, I can actually buy UGA at 56.5. Those setups should dovetail. They shouldn't be disparate. If I don't want to buy UGA, I've got no business buying the call, right? So in the case of UGA and RBOB, with the question about gasoline, Giancarlo's, yeah, for sure. But I will tell you, I still do like natty gas better, the other gas, natty gas. And I do therefore like XOP, FCG as the group of stocks that I will look into in terms of focusing on where the outperformers, when we look at all the names within that FCG, for example, let me show you here. Okay. When we look at FCG, by the way, has a lot of natural gas stocks in it, and it does overlap with some of the holdings in XOP. So when you take a look at this, double green at the tide level, look at all the double green within the group of stocks here. That's what I'm talking about. So yes, I do like the underlying commodity. I like RBOB better than CL. So RB symbol is better than CL. And I like NG better than all of them, if we're talking about energy. But remember, OPEC and natty gas have nothing to do with each other. OPEC is heating oil, RBOB, and crude oil. So thanks for the question. And keep those oil stocks in mind. The structure and many of them are still very, very good. Zion Spear, with the announcement on maybe not doing a 75-point hike, how will that affect commodities? Look, gang, yesterday, I don't know what that was. I'll be straight up. Everyone got excited because things could have been more hawkish. And it was what I was explaining, I think in the show too, that sigh of relief rally. We call them relief rallies. They're sighs of relief. Like, whew, right? We didn't have to deal with that. We still have a tightening cycle. We still have a very hawkish Fed. So how's it going to affect commodities? I mean, the main thing we saw was a little bit of a move higher in the euro, but not enough to do anything with. So my bottom line is almost nothing. It's really a non-starter. It's really a non-story. It was something that, keep this in mind, a few folks, well, not a few, I'm sure a good number of trades went off to say, oh my gosh, we're not going to see a 75-point rally. Let's buy. Momentum begets more momentum. It just continues to feed on each other. And because momentum begets momentum, it's a lot like piranha. Just when they get going, it's a frenzy. And so I've seen a feeding frenzy once, scuba diving, and it's as awesome as it is horrifying. And the excitement of one shark just feeds on the next and feeds on the next and feeds on the next. And before you know it, they're in a full-on frenzy. So keep in mind, again, that 75 basis point conversation, he didn't promise us anything, right? We're gonna focus on the data, not on the chuckleheads. And that includes chuckleheads on television. Is there any other kind? And the chuckleheads, meaning the FOMC. Our target rate expectations, right? If you go on over to that CME group website that I talk about incessantly, this is such a valuable tool to block out that noise, Zion Spear. Take a look. Our current rate, take a look then where we're expecting to go. And that's all. And as we get into, there's no really big reason to talk about the June 15 meeting now, but as we go forward, if that starts to change, we'll adapt accordingly. All right. So thanks for the question. All right. Next up is, can we expect some trade alerts from me today? If I see a trade, Danny, if I see a trade, I'll be in the futures room in the morning doing some day trading, and I put all those trades in the notes. And in terms of the mastery, we had some movement on the FOMC. That's what we wanted. And now we're going to go take a look at those corners of the market that are going to continue to likely move lower in terms of the relief rally that we saw. Now, why did I not take trades yesterday? So Danny, see that zone right there? That's normally where I'd say, hey, let's take a shot, right? Yesterday was anything but normal. So today we're going to go back and reassess. And this is why it makes sense to let some of the dust settle, because there's names on our list, but look at how the market moved. That would have crushed an aggro entry. That would have likely crushed a moderate, and maybe the conservative just got triggered and is hanging on. This is why I like to remind traders, caution days can feel, right, a lot like this. That's Jerome Powell. That's the market. That's us, right? So yes, I will be scanning this morning, and I would think this week, if not today, going into tomorrow, if I see some really clean setups, we'll get to work. Yeah, we'll get to work. All right. I definitely want to get back to work and get some of these trades on. So I appreciate the question. All right, next up, Integral Capital asks, what's my view on the FOMC news and how the markets will react over the coming days and weeks? I think it's going to be short-lived. Now, I say purposely, I think. Honestly, the market doesn't care what I think. What I'm going to look for is there that 50% exhaustion? I don't know. I can hardly tell you what the markets are going to do by noon, Integral. And honestly, if some of these folks were being straight up, they'd say, look, we don't know where the markets are going, but this is what our analysis suggests. I absolutely, and there's no way to say it other than this, I loathe prognosticators. I loathe people that say, well, in Q3 of 2022, this is where we'll be. And in 2024, this is where we'll be. Really? I can't remember. I don't even know what I'm going to have for lunch on Saturday. And yet somebody wants to tell us where the markets are going to be quarters from now. Hey, that's a superpower I don't have, but that I need some hip boots, right? I need some hip boots when that nonsense starts happening. So always, I tell my members, call me on it. If I start doing the markets are going to do this in Q3 and in 2023, please, somebody slap me. Give me a cyber shake and say, Rog, knock it off. You're looking at your crystal ball a little too hard. So I don't know. And I'm kind of being funny and a little emphatic because Integral, I don't know. I really don't. But here's the thing. Luckily, we are not paid to have either ESP or see the future. We don't get paid for that. We get paid to counterpunch. We get paid to react. Trading is a game of reaction. And if we can do that, we're good to go. So I know I kind of sometimes get over the top on that topic, but oh my gosh, it just runs rampant through our world. And it just somehow suggests there are immortals among us who can tell where the markets are going to be days, weeks, or quarters from now. Please, please. But here's what's interesting. And you might say, well, Rob, why do they do it? Because if their job is to be analysts and to be invited on television and publish books, if you pick a top or a bottom once in your career is made. You will always be invited back to say, this is the gentleman or this is the woman that picked the bottom. And that's why they do it. All right. So there you go. I'm just busting that wide open. There is a value to that to them. And that is because they're analysts. Their job is to be on television, not to necessarily profit from what they're telling you. I hope that makes sense. All right. So what if the daily chart conflicts with the weekly? Terry, I would not worry about that much. Always, this is the answer. Always know your time horizon. If it's days to weeks, focus on the daily. If it's weeks to months, maybe years, focus on the weekly. If for whatever reason, the weekly and the daily share a level of importance, something that is important on the daily also is important on the weekly, now you have a really valuable level. But I don't know that happens all that much. And I'm not really sure, again, not knowing what it is you're looking at. In fairness, I don't want to comment to say yes or no, because you might have a level that you've calculated on the weekly that's quite meaningful to you. So I don't want to undo that. But I usually don't see that kind of convergence often. But when it does, to your point, it can be pretty darn powerful. All right. Let's see. Next up, Larson family, you made some money on some momentum. Very cool. Very cool. Look, if traders were willing to take a higher degree of risk, and once they saw certain thresholds breaking, there is obviously money to be made on days like that, but then there's obviously money to be lost. And I'll always err towards the latter. Hey, what could I lose if I'm wrong? Not what could I make if I'm right? There's nothing wrong with either one, but I have found that in my 30 plus years, it's always served me to think about the only side that I can really control, and that is the risk. Everything is oriented to, if I'm wrong, how much is it going to cost me? And can I afford that? And that's always the logic from which I move forward with every trade every day, if I'm being disciplined. So thank you for letting us know and reminding us, hey, there is money to be made if we're willing to take a different degree of risk. All right, next up, what's the difference between accumulation and distribution? Accumulation is narrow range, a narrow range, a channel. Distribution's a wider range. That's the main difference. They're both sideways markets. They're both sideways markets, but one is narrower, lower volatility, usually more organized. For me, blue grab candles, and distribution is that wider range. And those are both Dow theory lingo for the way Dow would describe market trends. So giving credit where credit is due. Everyone would do very well to go back and study Dow theory. And then if you really like that, go on to study a little bit of Wyckoff. And if you do that, you'll know why I pay attention to relative performance, why we know there's four distinct market behaviors, and volume. Volume is so darn important. And that all for me comes from the fact that Dow theory and Dow work was a big part of my formative years as a trader. So very grateful for that being the touchstone for me as a young, impressionable trader. And that's what I try to pass on to you all. As always, gang, thanks so much for joining us. For charts in, Raghee already drank her coffee, so she's drinking some Richard's sparkling rainwater this morning. And I will see you all tomorrow. Same time, same station. If you're catching this on a replay, first of all, thank you for your time. Leave any questions that you might have below. This is moving the needle for you. Smash that like button, and I will see you all tomorrow. Same time, same station. Be good to each other.